Interest coverage or times interest earned ratio. The interest coverage ratio, also called the times interest earned ratio, compares the funds available to pay interest, earnings before interest and taxes, with the amount of interest expenses on the income statement. Interest expense on the income statement includes interest expense on debt obligations and on finance leases. The calculation of interest coverage ratio is earnings before interest and taxes divided by interest expenses. Fixed charge coverage or earnings to fixed charges ratio. The fixed charge coverage ratio, also called the earnings to fixed charges ratio, includes all fixed financing charges, which consist of operating lease and short-term lease obligations, principal repayments on loans, and lease liability payments on finance leases. The calculation is earnings before interest and taxes divided by fixed charges. Some examples of fixed charges are interest and principal payments on debt, interest and lease liability payments on finance leases, total operating and short-term lease payments. Cash flow to fixed charges ratio. The cash flow to fixed charges ratio indicates the amount of cash flow from operations the company has available to pay its contractual obligations. The calculation is adjusted cash flow from operations. The calculation of adjusted cash flow from operations is adding cash flow from operations with cash fixed charges and cash tax payments, and all together divided by fixed charges. Thank you.